It is 2024, and that means the next end-of-the-world moment for investors is on our doorstep. It's the general election. It has already been a hot topic from people from both sides of the political spectrum. Today, we try to add some historical context to election years and investment results. That's all coming up next. Hello, welcome back to Wealth Wednesday. If you would like to see more of what we create, you can visit our YouTube channel. That is at Commonwealth Financial, and you can also see it on our website. That is cfswv.com. Welcome to 2024. It is an election year, and I'm joined today by my friend and colleague, Evan Brockmeyer, who's a financial advisor here with me in the Marietta office. We've already been having questions about how will the election impact the stock market, and we have some great information courtesy of our friends from First Trust Portfolios, and we're going to share some of those slides on our website. Evan, historically speaking, election years, are they good? Are they bad? What?
Historically, they're good. But the interesting piece of that is that by the time we know who has won the election, we've already passed 75% of the calendar year. So it's an interesting way to frame it because, we don't know what's in store until November. So keeping that in mind that, election years typically are positive years based on the data. And over the course of time, 3/4 of the overall years, the market itself is up regardless. So it's something that, yes, it matters from a policy perspective and how easy it is for companies to make money. But as far as the red and blue or who or why, it's not as big of a factor as you might think.
Yeah, and I always hear a comment, you vote at the ballot box, not at your custodian. So it's one of those things where you want to be aware of what's going on. And I the elections do affect all of our lives in some degree, but from an investing standpoint, it's really not a big deal. So the average return of the stock market, and this is one of these questions we always get, when a Democrat's in office versus when a Republican's in office, the market actually does better when a Democrat's in office. The average total return going back several years is almost 15% when a Democrat is in office. For a Republican, it's about 7.85%. And one of the things you have to keep in mind here is when you look at some of the big uglies, 73, 74 was when Richard Nixon was in office, and that was during the middle of his Watergate scandal. And when you look at when George W. Bush was elected in 2000, he took office right there at the beginning of the dot-com bust. And then he also got a little bit of credit for the Great Recession as well, and part of that. So it's so random when it comes right down to it, and circumstances are what they are. 2022 hurt Joe Biden, for example, and that really wasn't necessarily anything that he controlled or didn't control. It just kind of happens. A lot of people like to focus on the presidency, but it also matters who's in Congress too, doesn't it?
Yeah. And to your point, I think a lot of those regimes, if you will, they inherit, past policy and past decisions that they don't have control of. So, and again, I have problems with both sides, and I think there's some systemic problems that exist too. So it's not, from a personal standpoint, I don't see it as one party versus the other. But to your point, there is some interesting data on the Republican versus Democratic president and the performance. And some of my takeaways here from First Trust, I think that, it's interesting to see how well it's done in split parties. The worst returns came from a Republican president and Democratic Congress, but the second best returns were Republican president and split Congress. So, the Republican president doesn't mean it's a cure-all for ultimate results. And, the policies that come through are really what matters. And we talk a lot too about how Wall Street tends to like gridlock, really, because there's some there's predictability in a sense in what's going to happen. If there's stalemate, then there's some certainty in the markets. And as frustrating as that is for us as both investors and the political party that we align with, it helps the portfolios more often than not.
Yeah. And, sometimes nothing happening. And we tell people this all the time. Sometimes the right things do nothing. And when nothing's happening to shape policy or tax policy or tax rates or however they regulate corporations and such, sometimes that works out okay for all of us, regardless of who you want to support. There's an interesting chart here, and one of these things that we often hear that if such and such gets elected, I don't want to be invested, because they're just worried about the markets as a whole. And this was kind of interesting. It's maybe not the most realistic chart in the world, but it does show if you were invested only when your preferred party was in the White House and basically then went to cash afterwards, and what happens versus just being invested. And the results are just staggering between the differences of this. Again, this isn't something that people would normally do, but it kind of goes to show that if you're allowing your political beliefs to influence your investment decisions too much, it can be very costly over time. And we really want people to focus on their long-term goals and what they're trying to do and what they want to accomplish as a whole, and not spend as much time and as much emotional capital, if you will, watching MSNBC or Fox News or whatever source they do to let them guide their investment decisions as a whole. Evan, give us some final thoughts here today as we look ahead to 2024.
Yeah, I think you made a couple really strong suggestions there. I would really encourage everybody, if you can, to not get bogged down in what the polls say and what the news media is saying is going to happen with either the election or the markets because of it. I mean, we've seen earnings estimates and predictions of where 2024 should land. And if you look back, there's not a lot of accuracy to it. I mean, we just don't know what is going to happen and what the impact's going to be. So, it's not worth the stress and the headache. And more often than not, it pays to just stay the course. And as, boring as that can be, the chart that we're going to show, it shows that it's worthwhile. So, enjoy the year and enjoy what you have in your life, and then the markets are going to take care of themselves.
Yes. And, and one thing that we are very confident of is Wednesday, November 6th, the sun's going to rise in the east. The great companies that we own in your investment portfolios are going to continue focusing on running profitable businesses, and your primary goals really aren't going to change because of that election. And remember, it's 3 out of 4 years when the market goes up on average. It doesn't mean that that's going to happen this year or next year or any time like that, but it is, generally speaking, being an optimist usually helps you reach those investment goals and your financial goals as a result. Evan, thank you for joining me today. If you have any questions or would like to discuss this in greater detail, you can find us on the web. Again, cfswv.com. Thanks for watching. Have a great week.